Welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne. He is the founder and editor of the Daily Gold. And Jordan, first question that I want to throw over to you, pretty direct in terms of the potential movements in gold. Are we going to see a gold price of $12.20 sooner rather than later? Is that pretty much a guarantee when you look at the chart right now?
Well, you always have to be careful to make guarantees and blanket statements like that, but I think it's more likely than not that gold is going to go lower. There's a couple reasons. I'll be brief. Number one, gold on the daily chart looks like it's made a triple bottom around 1270. Triple bottoms, there's really no such thing. If it doesn't make a double bottom and it comes down again, it's likely to break it. Secondly, we have the dollar breaking out. The dollar is gaining more strength. That coupled with silver just having been falling apart and just going lower without much of a rebound along the way. That, in addition to the gold stocks just being relatively weak in the last month or so, those things are telling you that gold, it's probably more like its next move is more likely to be lower rather than higher. So I'm not seeing any reason why gold is going to bottom here and then suddenly rally above 1305 where its peak was earlier this month. I think it's more likely than not it's probably going to drop lower.
So, Jordan, say the daily chart for gold. It's what I'm looking at there. And ever since that peak we hit in the later part of February at 1350, pretty much at 1350, we've seen kind of a general downtrend. It hasn't been a distinct or hard sell-off, but it has just been this grinding lower where the bounces reach lower peaks, unfortunately, and the lows fairly consistently are hitting slightly lower lows. Again, it's not a drastic sell-off, but it is this slow grinding move lower. What does that mean when you look at a daily chart like this and you just see this constant general selling moving the market down?
Interpretation and technical analysis is everything. And when chartists get things wrong, they could be interpreting it wrong or the market just acts unusually. So these things are an art more so than a science. So there's never a perfect right answer. But I would say it's interesting. For me, I don't think you can really take that much out of just looking at the daily chart of the last 3 or 6 months or the last year. Because if you look at that, you can say, well, gold has had this decent rally from 1160 or 1170 all the way up to 1350, and now it's just correcting, and that's good and fine. Yeah, it has corrected a little bit here, but it's still above the 200-day, which is at 1258, and it's sloping up, so that looks bullish. However, when you take a much broader, longer view, you can see that gold, it failed to get up to 1360 and 1370, and so gold made a lower high, and that's something that people seem to forget. It was a clear lower high. If gold was able to rally up to 1360 or 1370, and then it would be doing this little pullback, it would be quite a bit more bullish in the big scheme of things. So gold has made this lower high, and that's part of downtrends. And so that is my concern. And when I look at the price action of this little correction, it does look somewhat similar to how gold corrected in the second half of 2016 and early 2018 when it had this consolidation for a little while and it topped and then it just kind of sold off hard and fell apart. So I'm a little worried about that. I mean, looking at the last couple of days, the last week or so, there's been a lot of selling, but it's been kind of steady and not that strong and swift. And so I'd be concerned here and now looking at the market. Yeah, we may bounce for a day or two, but we could get a dump below 1270, maybe $15, $20, $25 or so, because that's my worry. So to specifically, what does it mean when we get a slight downtrend? I think it's, you really have to take a much bigger and broader view. And I'll also throw in that gold and gold stocks have been underperforming the stock market. So it's been weak in relative terms. So for me to say, what does it mean? What is this little correction or this little down, what does that mean? For me, I have to take a step back and really analyze the whole picture.
And the whole picture, especially in a broad term sense. As you mentioned, we've been putting in lower highs ever since that run up in 2016. However, you look at the lows, though, and there have been some higher lows. So it's trading in a tighter and tighter formation. Usually that means that it's building up steam to either break higher or lower. It sounds like right now your bias is for a potential break lower, especially when you're looking at that longer term chart.
Well, I would say you could, if you were drawing a triangle or a consolidation range, you could connect the 16, 18 and 19 highs, and then you could connect the 16 low and the 18 low. And I don't know if it's going to break down or break up. It doesn't really look that bullish to me. But that being said, Corey, gold has been in this slow sideways market for a while. I mean, I'm not thrilled how this has turned out because to me, it just doesn't look that bullish. But I'm just at this point, I don't really want to make any projections in the near term one way or another. I think the Fed cutting rates is going to play a huge role here. I mean, they tell me if they're going to cut rates in September or December, if it's going to be next year. And when we know the answer to that, we know more likely than not how gold is going to perform. If the Fed is going to cut rates in September, then it's a bad idea to get too bearish on gold. However, if they're not going to cut rates until December or next year, that's 6+ months away. So that's a lot of time where gold can continue to consolidate or even sell off. So I'm not terribly concerned about the technicals of gold right now, just because we have this potential fundamental catalyst looming in the background. And for precious metals, a lot is riding on that. I will just mention, I looked at all my historical data again. I was looking closely, and interestingly, the median and average time of when the gold stocks bottom before the first rate cut is typically 1 month before. Now, we don't know. It could be 2 months before this time. It could be the same month. But if you just go by that 1 month before, and the Fed is going to cut rates in September, then that would mean, we could probably get a bottom in August potentially. So that's something to keep in mind.
All right, let's also look at GDX. And you mentioned that the gold stock's still relatively weaker than the actual gold price. And when you take a bigger picture look, say that monthly chart, we are seeing lower highs and unfortunately kind of mixed lows, with the most recent low being a lower low. These stocks continue to show the overall weakness in the sector and the lack of a whole lot of interest from average general investors. What do you think, Jordan? What are some of the levels that we need to watch in GDX? I've heard a lot about this 2050 level, but quite frankly, we're giving that up. So now where do we look?
I'd probably say 17 or 18. I mean, the lows at the end of 2018. That to me is, I think there's a chance that we could go lower and head there. I mean, the price action in GDX it's not very good right now. I mean, yeah, it's been trading around the 200-day, but just looking at the daily candles of the last couple weeks, it's not particularly bullish, in my opinion. So I would focus on that low in October, November for both GDX and GDXJ. And looking at GDX, I mean, that comes into play, I think, in the high 17s or the low 18s. So that's what I'd be looking for. I mean, if you look at the Huey, that's been even much worse than GDX. That to me, that looks like it's sooner rather than later probably going to get down to those October and November lows. And I mentioned the Huey just because that is it's basically GDX but without the royalty companies. So that's why GDX is much stronger than the Huey. Last point I'll mention is I like to track the breadth and what percentage of the stocks are trading above certain moving averages. And the issue in the last couple of weeks for me, Corey, is if you look at what percentage of GDXJ and the Huey are trading above the 200-day moving average. Coming into this week, I think I had figures of like 55% and 47% for GDXJ. So on a long-term, let's say 200-day basis, the gold stocks are not oversold. And so for me to get bullish on the sector, I really want to see those readings come down below 20, maybe even below 15%. And so you get that, and then you get a rate cut in September. That's what could set up a really strong move into year end. But again, that's projecting out several months. The here and now is the price action has been bad. The market's weak. Yes, they're oversold, and that's why they haven't plunged completely in the last couple of weeks. But to me, it's still more likely than not that they're probably gonna trade lower over the next month or two.
Yeah, unfortunately, but that kind of also flies in the face of some of these commentators that are saying the sentiment has gotten so bad in the sector that it is due for a bounce. We're still not at some of those oversold levels, so could still be a little bit more downside, but even if we do get a little bit of a bounce, it has a long way to go to change the overall trend that it has been in. Quick comment, though, on silver as well. Silver definitely in a downtrend for, again, most of this year. Even the bounce at the beginning or tail end of last year, still relatively weak, as it did not even really come close to some of those higher or lower highs that silver was putting in throughout 2018. What do you think about silver? Could we be seeing below the teens, maybe into the 12s for silver?
It's possible. I mean, looking at some historical charts, I do see some good support at 12. And looking at, if you look at what happened from 1998 to 2001 before silver bottom, the price action there is really similar to what's happened since 2015. You had a sharp move up, then you had a correction, then you had a consolidation for a while, then silver broke down from the consolidation. That's what happened 99 to 2001. It broke down from that consolidation and declined eventually to a major low. And so silver in the last 3 years has followed the exact same pattern. It's already broken down from the triangle consolidation, which lasted a while. The rally we had at the end of last year, there was kind of a retest of the breakdown from the triangle, though it did go on a few months longer than I would have anticipated. Silver is rolling over again, and it's in the last phase of that comparison where it just declines to a major low. And so, looking at silver, I don't think you really want to touch this. No, number one, until the Fed cuts rates, and number two, it might, silver might even, you never know, but it could possibly bottom, well after the Fed cuts rates, because if you go back to the 2001 low, silver didn't even bottom for until a year after the gold stocks did. So I'll have to look at it more closely this time around, but I don't, I think we're probably going to see silver continue to move lower, and over the next couple of years, I'm very bullish on silver as we see rate cuts and we see probably massive government spending in the U.S. When we get the next downturn, we try to come out of it with extreme policy. I think that's going to be very bullish for silver. But, here and now, Corey, it just continues to trend down. And, as a potential value buyer, I just, I don't want to be in silver yet. So $12 is a level I would keep in mind.
Okay, and Jordan, is all this kind of negativity around the precious metals also in part due to this overall strength that we continue to see in the U.S. dollar? Again, it's not screaming higher, but it is still very much in an uptrend today as we're recording this, over 98 on the dollar index, and against a lot of other currencies just outside of that dollar index, which is heavily weighted against the euro. The dollar is very much outperforming. Can you address this?
Yes, yeah. I would also keep in mind the trade weighted index, which that has a long-term, I think, all-time high resistance in 2002, and the dollar is on the cusp of breaking above that. And so this is basically the dollar against trading partners, so it doesn't have the huge weightings of the euro in there, so it has the Chinese currency in there. So that breaking out to a new all-time high, that's going to create problems for the rest of the world. Dollar-denominated debt becoming more of a burden. So that's not good. I would hopefully the dollar. It sounds perverse saying this, but Corey, but hopefully the dollar will continue higher here, because if it does, that's going to lead to the Fed cutting rates, other central banks probably cutting rates, and that would be bullish for precious metals. So obviously, here and now, the dollar, it's breaking out. It's at a new 52-week high. It might be at a 2 or a 3-year high. I haven't looked closely enough, but if that gains some more momentum on the upside, Corey, that's obviously not going to be good for precious metals. But that could lead to finally a real bottom in precious metals, and specifically in silver in the stocks. So you don't want to get in front of the dollar here and now, but if this continues, Corey, eventually it'll probably force the Fed to cut rates, and that's where you're talking about bearish sentiment and things are oversold. You always have to wait for fundamentals to come into play, and so that's why I'm beating the drums about a rate cut, because when that happens, that's when fundamentals are going to turn for precious metals. And that's when you can be not just a buyer, you can be a buyer and a holder in that scenario.
Okay. Well, Jordan, something that we have talked about. We are just waiting for the Fed to actually start cutting rates, but unfortunately, they are not there yet. So let's see what kind of moves in the general markets we get and any economic data that might get them starting to cut earlier. The market is starting to price in, or it is pricing in a cut by the end of the year, but so much can change by that time anyway. Jordan, good chatting with you. I'm going to post a link to your website below. Everyone go click that link and follow along with what Jordan is covering and watching for the precious metals. Thanks for your time today, Jordan.